Good morning, everyone. Before we take a look at the markets and a few stocks that are moving here, here's a stock that obviously has been hyped up. It started its move higher a month or so ago. You can see where this volume came into it and it gapped up. I haven't checked the news, but it's probably some news out there that started where something was going on with the company, and it made a little run up and basing here, and clearly this has been doing nothing for a long time, and you can tell that by the alignment of these moving averages where they're close together. The shorter are below the longer, but they're flattening out. And then you can see here, this is actually a nice alignment if you're using moving averages as a visual aid, as I like to call it, as a stock that's beginning to turn around, where the shorter just come above the intermediate term and the longer. This is a 200, a 50, and a 20. And the stock, the prices are kind of basing right there. And then you get this breakout. And you didn't have a lot of volume here, but there's a breakout with a wide range bar, which ignites the move. And it ran up nicely. And from here, a huge gain. And it looked like it could go quite a bit higher. Now, this is a pharmaceutical company, a small pharmaceutical company. They can provide great reward, and they also come with great risk. As I said, I haven't checked the news, but as of this moment, this stock is trading at $2.15. So those that bought this on the run up, and clearly, as we all do when we buy, we believe it's going to go higher, but there's a lot of risk with these little pharmaceuticals, sometimes even with the big ones. And, owners that bought this in the last few days are down around 40 and 50%. And my experience with these is that it's going to take years if they even ever get their money back. A lot of these stocks just go into comas for a very long time. So, if you're going to trade them, be nimble, and if you're holding them overnight and longer, this is the risk that comes along with them. So be so informed. A wide range bar that happened yesterday looks really interesting here. Snap, it's been dead, since its IPO. It's done nothing but been under distribution. It had this gap down in August, and it came back up. And here it tried to roll back over again and right back up into the resistance here, and it actually held up. This is what I call a shakeout, where prices had been going sideways. Looks pretty good. It breaks to the downside, and obviously then it looks like it's coming down here, and then immediately turns back up and consolidates right at the congestion area. Yesterday, prices broke out above that congestion area, closed at the high, and here's the volume. Right now it's trading at 1620, so it's up a bit here. This is a bottoming pattern. You can see that. You got a bottoming stock and a nice little pattern here that's clearing some resistance. So it certainly looks like it's the start of a move here. Bottoming patterns do just that. A lot of times they come back in again. They wiggle because they're not momentum stocks yet, but this has the potential to become a momentum stock. You got a little resistance here and here. It does have earnings coming out. Let me just check. I always want to know that. November 9th. So we have some time before earnings, but this might be one of those plays that runs up into earnings. Walmart made a move up this week. It looks great. Let's take a look at the longer time frames here. Since we talked a little bit about moving averages, look at the alignment of the moving averages here, which they had been rising, and then they flattened out, and now the move has started on volume. So this tells us that the move is just getting started, but let's take a look at a higher time frame. Let's take a look at the weekly. I want to know where the next reference point of resistance is and how this looks on a higher time frame. Remember, as you change time frames, you get different pictures, and multiple time frames can give you insights into a lot of the probabilities. So based on this pattern, and let's consider that this is in the retail sector, which has been decimated primarily by Amazon competition, and this is done really well. There's been news about Walmart and Amazon in the news of late. You can check that out. But this has the type of look, this is the kind of pattern that says it's going higher. Wide range bar breaking out. There's some resistance here. This pattern says it's going to get through it. So looking really good. Do have a little bit of a concern as far as the market goes. It's a little extended here, but now this is where you want to combine the concept of relative strength or relative weakness. Whereas if the market starts to retrace here a bit, and it is down a bit here, we'll get to that. The S&P futures are down about 5 points, and the Nasdaq futures are down about 9. We want to see how this holds up here when the market does retrace. And that's going to be something that gives us a lot of information that the big demand, big money just keeps coming. All right, so let's just take a look at those. Well, here's another little guy that is just coming out of a base here. Let's see what they do. Okay, so this here is technology, software and infrastructure, so it's not a pharmaceutical. So here is another stock, even with a market that is a little bit extended. We're still finding a lot of great opportunities with things that are just starting to move. And look at the alignment here. The moving average is up. The 200 was, over the top of it because it was in a downtrend here, and it's recovered and built up this base, and it's just getting started on volume. So this is one you want to consider to go higher, maybe get a little retracement over the last few days. Right now, it's trading at around 26.95, offered around 27-ish. So it's hanging right here. It looks good. So NTNX, technology company. And let's just see what the broader markets are doing here. So not a big deal here. You see, they've moved up, and, moving up this many days in a row is just inviting for some type of a retracement, or possibly if they break out, a breakout failure. You can see what they did here as they ran up. And just based on this, you could say, well, it could go up that many days in a row. And notice how it started to go sideways, and which is what it's doing here. It's kind of like it's building up a base, and that could be a launching pad. But when they go up this many days, you can see as it did here, as it ran up here, then the accident ran up here, and then the accident that ran up here, and then a correction, and so on. So you want to be very careful about putting on positions after 5, 6, 7, 8, 9 days up or whatever it is. Breakouts tend to fail at that time. You want to buy on the pullbacks. And if it should pull back to here, that would be an opportunity, or if it goes sideways for a longer period of time. S&P's pretty much the same, further run up there. The Dow also had even a bigger run, and we're giving a shot here with our subscribers with a short-term bearish position on IWM. If it starts to pull back here, and I can show you. Let's run up, and there's the base. Looking at it from an intraday point of view, and just again looking and considering where the market is at here. If it can break through here, we have that void concept where prices could pull back, and from a short-term perspective, we look to profit from that. And of course, we have our other line in the sand where we don't want to see it get back up above those highs there, because it could then continue to move up. Right now, it's trading a little lower at 149 and set 149. Well, it's actually right around this area here. 149.75 was a little lower before. So we shall see. There it is, guys. If there's some trades or concepts or stocks that you'd like me to look at that I can help you with, put your comments down below, and I'll take a look at those, and we can cover those in one of these sessions here. Great trading. All right, talk to you tomorrow.